Okay, so today we're diving into something that I think we all hear about constantly,
Oh, yeah.
inflation.
Yeah.
But we're going to look at it from a slightly different angle.
Interesting.
We're going to be looking at how it impacts two pretty key areas of personal finance,
Okay.
annuities and life insurance.
Right.
And we're going to be drawing on some really interesting insights from a piece by diversified insurance brokers
Cool.
who clearly know what they're talking about.
Sounds like it.
And the thing that I found really fascinating about this piece is that it really highlighted how inflation can actually erode the value of your life insurance payout over time.
Yeah, that's one of those things that people don't really think about.
Yeah.
Think, oh, I've got this great policy. It's
Yeah.
going to pay out this much money.
Right.
And I'm good.
Right.
But it's really not that simple.
Yeah. It's it's like that classic example of like,
Yeah.
when I was a kid, a movie ticket was $5.
Right.
And these days, you can barely get popcorn for that.
Exactly.
So, it really does illustrate how that purchasing power of money
Right.
changes over time.
Exactly. Yeah. And the thing is that with inflation,
Yeah.
what happens is that the value of money decreases over time.
Yeah.
So, if you have a life insurance policy that's going to pay out, let's say,
Yeah.
$500,000
Yeah.
in 20 years,
Right.
that $500,000 is not going to be worth
Right.
as much as it is today.
Right. Yeah. So let's maybe drill down a little bit more specifically into how this impacts life insurance.
Okay.
And I guess maybe starting with a specific type of life insurance,
Sure.
term life insurance.
Right. So term life insurance
Yeah.
is basically where you have coverage for a specific period of time. So
Right.
it could be 10 years,
Okay.
20 years, 30 years, whatever you choose.
Okay.
And the death benefit
Yeah.
is fixed.
Right. So that means that whatever amount you take out the policy for,
Yes.
if something were to happen to you,
Right.
your beneficiaries would get that amount,
Correct.
regardless of when in that term period.
Exactly.
So,
Exactly. So that's the big
yeah.
problem with term life insurance in an inflationary environment.
Okay.
Because that fixed death benefit
Right.
is going to be eroded by inflation.
Oh, right. Yeah. It's almost like it loses value over time.
Exactly.
Yeah. So, this is,
Yeah,
it is scary to think about it,
it is.
especially when you're planning for, providing for your loved ones in the future.
Absolutely.
So what can people do about this?
So there are a couple of things that you can do.
Okay.
One option
Yep.
is to look at increasing term policies.
Okay. So what does that mean?
So an increasing term policy
Yeah.
basically allows you to increase your coverage
Okay.
over time.
Okay.
So you could say, I want my coverage to increase by
Right.
5% every 5 years.
Okay.
Something like that.
So it
Yeah.
sort of tracks with inflation.
Exactly. Yeah.
Okay.
So it helps to offset
Yeah.
the effects of inflation.
But I guess
Of course.
the downside to that is
The downside is that,
your premiums are also going to
your premiums are going to go up
go up.
as your coverage goes up.
Yeah. So there's always that sort of
It's a trade-off.
trade-off.
Right.
Yeah. Okay. And I guess another option that you mentioned.
Yeah. The other option is to look at permanent life insurance.
Okay. So how does that differ?
So permanent life insurance is a little bit more complex.
Okay.
But basically,
Okay.
it provides coverage for your entire life
Okay.
as long as you pay the premiums.
Right.
And it often includes a cash value component
Oh, okay.
that can grow over time.
All right. So that sounds like that could be quite beneficial in this context.
It can be, yeah, because that cash value component can potentially grow at a rate that
That's-
helps to offset the
Yeah.
effects of inflation.
So you're sort of building a little nest egg
Yeah, exactly.
alongside the
Alongside the insurance.
insurance coverage.
Right.
Okay.
But again,
Yeah.
permanent life insurance is more expensive
Good.
than term life insurance.
Right. So again, there's those trade-offs
Exactly.
that need to be considered.
Yep.
And I guess, you mentioned that it's more complex.
Yes.
Are there different types of permanent life insurance?
There are different types.
Okay.
You've got whole life insurance.
Okay.
You've got universal life insurance. And you've got variable life insurance.
And do they all sort of perform differently in an inflationary environment?
They do, yeah.
Okay.
So, for example, whole life insurance
Right.
is typically tied to interest rates.
Okay.
So as interest rates go up,
Yeah.
the cash value of your policy
Yeah.
can potentially grow faster.
Okay.
Variable life insurance
Yeah.
is actually tied to the performance of the stock market.
Oh, okay.
So if the stock market's doing well, your cash value could potentially grow even faster.
Okay.
But of course, if the stock market's not doing well,
Right. There's that risk again.
there's that risk. Yeah,
Okay, so it sounds like there's no one-size-fits-all
Yeah.
solution here.
definitely not.
It really depends on individual circumstances and all that.
Exactly.
Okay, cool. So we've talked a bit about life insurance.
Yeah.
But, a lot of people also rely on annuities
Right.
for retirement income.
Mm-hmm.
So how do they fare when it comes to inflation?
So annuities are also impacted by inflation.
Okay,
And the way that they're impacted really depends on the type of annuity
right.
that you have.
Okay, so maybe we should break down different types of annuities.
Yeah, let's do that.
And look at how they're impacted.
Okay.
So maybe starting with a fixed annuity.
Sure. So a fixed annuity basically provides you with a guaranteed stream of income. So you pay a lump sum of money to the insurance company,
Right.
and then they guarantee to pay you a certain amount of income every month
Right.
or every year
For a certain period of time, or?
for a certain period of time.
Yeah.
Or even for the rest of your life.
Okay, and that sounds
Sounds great.
a pretty good deal in theory,
Does sound great.
especially for people who are planning for retirement,
Absolutely.
who want that
That
stability and that guarantee of income.
But the problem is
Oh,
that those fixed payouts
yeah.
don't take into account inflation.
Right, so even though you're getting that guaranteed amount,
Right.
that amount might not
Yeah, that amount might not be worth
be worth as much.
as much in 10 years
Yeah.
as it is today.
So it's almost like your buying power is decreasing over time.
Exactly.
Yeah, right. So that's
That's not ideal.
the big downside
Yeah.
of fixed annuities.
Yeah. So are there any types of annuities that sort of
Yeah,
help to address that?
absolutely.
So you can look at what are called inflation-protected annuities.
Okay.
And these annuities have mechanisms built in
Okay.
that help to adjust your payouts over time
Right.
to keep pace with inflation.
So it's sort of like
Yeah.
you're tracking with inflation.
They are, yeah.
Oh, cool.
So one common mechanism
Yeah.
is a cost of living adjustment, or a COA.
Right?
And basically what that means
Yeah.
is that your payments will increase each year
Mm.
based on
Right.
some measure of inflation.
So that sounds like a pretty good way to sort of,
Yeah. Protect yourself.
it's a good way to protect yourself
Yeah.
from inflation.
Okay.
Ah.
So we've talked about fixed annuities.
Yep.
We've talked about inflation-protected annuities.
Yeah.
Are there any other types of annuities that we should consider?
Yes. So another type of annuity that's popular
Yeah.
is a variable annuity.
Okay. And how do they work?
So variable annuities are a little bit different
Okay.
because instead of having a fixed rate of return,
Yeah.
your returns are linked
Okay.
to the performance of a specific market index.
Okay.
So for example,
Yeah.
your annuity might be linked to the S&P 500.
Okay.
So if the S&P 500 goes up,
Yeah.
your annuity value goes up
Right.
and your payouts
Yeah.
could potentially increase.
Okay.
But of course,
Oh.
if the S&P 500 goes down,
Oh.
your annuity value goes down
Right.
and your payouts could potentially decrease.
So there's more risk associated with this type
There is more risk.
of annuity.
Yeah.
Okay. So that's
You have the potential
yeah.
for higher returns.
Yeah.
You also have the potential
Yeah.
for lower returns.
Okay. And how do these variable annuities?
So variable annuities can actually do pretty well
Okay.
in an inflationary environment.
Okay.
Because if inflation is high,
Yeah.
that often means that the stock market is also doing well.
Okay.
So your annuity value
Yeah.
could potentially grow
Okay.
at a rate
Yeah.
that outpaces inflation. So you're sort of,
You're staying ahead
staying ahead of the curve.
of the curve. Exactly.
Okay.
But again, there's that risk
Right.
that if the market doesn't do well,
Yeah.
you could end up
Losing out?
losing money.
Okay. So you mentioned that variable
Yeah.
annuities
Yeah.
could do well in an inflationary environment because
Right.
often inflation is high
Mm-hmm.
when the stock market's doing well.
Right.
But inflation also has an impact on interest rates,
It does.
right?
Yeah.
So how does that play into all of this?
So inflation and interest rates
Yeah.
are very closely related.
Okay.
Typically, when inflation is high,
Yeah.
interest rates also tend to be high.
Okay.
And this can actually be beneficial
Okay.
for certain types of annuities.
Right. Like which ones?
So, for example,
Yeah.
fixed indexed annuities,
Okay.
or FIAs,
Yeah.
they often have their returns linked to a specific index.
Okay.
And when interest rates are higher,
Yeah.
those returns can potentially be higher as well.
Okay.
And also with variable annuities,
Yeah.
since they're tied to the stock market.
Right.
And the stock market often does well
Yeah.
when interest rates are high.
Right.
You could potentially see higher returns.
So higher interest rates can actually be a good thing.
They can be a good thing.
For certain types of annuities.
In certain types, yeah.
Okay. But I guess the other side of that coin is that...
Yeah, but the other side of the coin is...
if interest rates are high, that also impacts...
It impacts everything.
Yeah.
It impacts the cost of borrowing.
Right.
It impacts the returns that you get on your savings.
Yeah.
And it also impacts insurance companies.
Right.
Because insurance companies are businesses.
Right. They need to make money.
They need to make money.
So they're going to adjust their products.
Exactly.
And their pricing.
They're going to adjust their products and their pricing.
To reflect that.
To reflect the higher interest rates.
So I guess that's kind of a
double-edged sword.
A double-edged sword, yeah.
Yeah.
It could be good. It could be bad.
Exactly.
It really depends on the specifics of the situation.
It does.
Okay. Well, this has been...
it's complicated.
Yeah, it's complicated, but it's been a really interesting dive into how inflation impacts these financial products.
Yes, absolutely.
So I guess the key takeaway here is that...
Yeah, the key takeaway is that you really need to be aware of how inflation is impacting your finances.
Mm-hmm.
And you need to be proactive about taking steps to protect yourself.
Right. So it's not a set it and forget it type of situation.
Definitely not.
You need to be constantly reviewing.
You need to be reviewing your insurance policies, your annuity contracts, making sure that they're still meeting your needs.
Yeah, and making adjustments as needed.
And
And I guess that's where a company like...
Yeah, that's where a company like Diversified Insurance Brokers can really help.
Right.
Because they can provide guidance.
It can help you.
They can help you
evaluate your situation.
Your options.
Explore different options.
Yeah.
And make sure that you're
making the best decisions.
Yeah, making informed decisions.
For your situation.
Okay, cool. Well, it's been a pleasure having you on the show.
It's been a pleasure being here.
Really appreciate you sharing your expertise.
You're welcome.
And for all of you listening out there, we focused on annuities and life insurance today.
Mm-hmm.
But inflation impacts every aspect.
It does.
Of our financial lives.
Yes.
So it's something to be aware of.
Absolutely.
And to be thinking about.
Yeah.
How is it impacting your other insurance policies?
Right.
How is it impacting your investments?
Exactly.
These are all things that are worth exploring.
Definitely.
So until next time.
Take care.
Stay informed.
And
stay ahead of the curve.
Absolutely.
See you later.
Bye.